Welcome to Life of Economics. Today's episode examines the housing market in Jeju Education City, often referred to as GEC. Despite its reputation as premium education focused area, housing prices have fallen to near historical lows. This episode will explain why, using economic theories that we have learned from two previous episodes, and compare GEC with the broader Korean housing markets. GC has approximately 3,400 to 3,500 housing units. Mainly, apartments are built to serve families connected to international schools. From a supply perspective, this number is relatively fixed in the short run. Developers already completed these units and constructions was financed largely through that. This creates pressure on suppliers to supply or rent units to recover costs. However, when supply is high and demand is weak, suppliers lose pricing power. Even if developers lower prices, it does not necessarily increase demand in this market, which is a key issue we will return to later. Housing demand in GC is highly dependent on student enrollment. Recently, student numbers have decreased. As enrollment falls, the number of parents who are primarily consumers in this market also declines. This leads directly to more empty apartments, lower occupancy rates, and reducing willingness to purchase property. And unlike urban housing markets, GC does not have a diversified buyer base. Demand is narrow and fragile. Theoretically, even if consumers' demand falls, investment demand could support prices. However, this has not happened in GC for three major reasons. First, Korea is experiencing a market recession, particularly in real estate markets. Investors are risk takers and avoid damage. Secondly, Jeju housing is often considered a second home market, but the Korean government heavily penalizes second home ownership. So the buyers face higher property taxes, land taxes, and holding costs. These policies remove incentives to purchasing housing for investment or vacation usage. Third, many parents choose to rent out rather than purchase since their stay is temporary. This further weakens purchase demand and prevents a healthy housing cycle. As a result, the circular economy where buying, selling, and reinvesting sustain the market does not function properly in GEC. Nationally, Korean housing prices are declining, but major cities still maintain demand due to population density, jobs, and long-term residents. However, GC is different. Even as prices fall, new buyers do not enter the market. This contradicts the typical economic expectation that lower prices increase demand. In GC, price decreases lead to lower market confidence, expectations of further price drops, and even weaker demand. This creates the demand to continue to decrease, where falling price reduce rather than increase buyers' interest. One potential solution is demand side expansion through education infrastructure. If a new school opens and brings, for example, 1,300 students, the effect will be significant. Student population will increase, parents' population rise, and the number of residents will grow, and housing demand increases. Even if enrollment does not reach capacity immediately, demand will strengthen over time. In economics, this represents a structural demand shift, not a temporary fluctuation. As demand rises while supply remains fixed, housing prices will likely increase again. The housing problem in GC is not simply about prices, it is about who demands housing and why. High supply, shrinking student numbers, disappearing investment demand, tax penalties, and weak circular economy have combined to suppress prices. Without a fundamental increase in demand, most realistically through new schools or policy changes, price recovery is unlikely. Understanding this case shows how housing markets depend not just on buildings but on people, incentives, and long term confidence. The housing problem in GC is not simply about prices, it is about who demands housing and why. High supply, shrinking student numbers, disappearing investment demand, tax penalties, and a weak circular economy have combined to suppress prices. Without a fundamental increase in demand, most realistically during new schools or policy changes, price recovery is unlikely. Understanding this case shows how housing markets depend not just on buildings but
on people, incentives, and long term confidence.